Right, guys, how we doing? So just wanted to jump on and do a quick live with a Mortgage Rates UK update. We have got more reductions due, which is fantastic news for the mortgage and housing market as of tomorrow. And I wanted to draw your attention to a couple of things. An email that I've received in regards to rate reductions, and then I want to jump on my computer and have a little play around with mortgage rates, fixed rates, see what's going on, so we can give you guys an idea of what to expect. If you've got any questions, I'm just going to open the chat box here. And there we go. So any questions along the way? I've got the chat open as well. So let's jump on and have a look at these emails. Kofi, how you doing? Yeah, I'm doing good. How are you? You good? Good, I hope. So let's have a look here. So here's the email. Okay, that you can see there. Fixed rate reductions, should I say. So anything up to 0.31% nationwide. All right, so what I want to do now is just have a look at some of these rates. Evening, Trouty Posh. Hope you're doing good. So let's have a look here. So as we can see, 5-year fixed rate, 10% deposit, it's going to be 4.79%. 4.29, that's a 40% deposit, quite a big one. But even with a 5% deposit, we're getting rates nearer the 5% mark, which is, well, 1 minute they were up 6.5%, 7% weren't they? So rates are going down, which is fantastic news, and they're carrying on reducing. So let's have a little look at some rates here. Okay, so, and just if anyone can let me know that, you know, you can hear me okay and the screen's going fine, you can see the screen with should say velocity in the top left, that would be great if you just let me know in the chat, just so I know everything is working. Okay, so at the moment we're looking at 5-year fixed rates. Now it's everything working. Cheers, guys. So now, first of all, obviously I need to make one thing clear, is that I'm not recommending a mortgage product or advice here. This is just having a look at rates. If we have a look at rates, I need to let you know what the annual percentage rate is as well. Everyone's circumstances is individual, so this is not a blanket recommendation to everyone to go and get fixed rates. We're literally just having a look to see what's going on here. So at the moment, we're looking at sort of 4.8% with Virgin. And what I've done here is we're looking at £300,000 as a purchase price with a 10% deposit over 30 years. And we're looking at a monthly payment of around £1,423. Okay, 4.8%. And the APR, annual percentage rate on this one, is 7.6%. Annual percentage rate is taking all fees and everything into account. Fees added to the loan, interest, everything. And this is an exclusive 5-year fixed rate. Exclusive is only available via a mortgage broker. Incidentally, I've dropped a link to our website, so you can book a free chat at any point. Just go to mortgagechain.co.uk, click book a free chat, choose phone call, video call, and then away we go. Choose your time, provide your details. So at the moment, nationwide, we're looking at a 4.92%, and that is going to drop to 4.79 as of tomorrow, and that's on the 5-year fixed. So another drop is going to take you to around the sort of 1,400-ish per month mark, based on a £300,000 purchase price with a 10% deposit. Let's have a little look at some 2-year fixed rates, shall we? So just going to go back to the sourcing criteria here. 2-year. Let's have a little look there. Tomorrow, 2 years with a 10% deposit is going to be 5.29%, which is heading in the right direction. Again, 5 years are looking better. They're the best rates at the moment because lenders want you to have a 5-year. 2 years more of a risk. I've spoken about 5-year versus 2-year. Okay, and just to clarify that, so 5-year fixed rate versus 2-year, a lot of first-time buyers say, I want to go for a 2-year fixed rate, assuming that fixed rate is the right product for you. And I prefer 5 at the moment because 2-year fixed rates is a bit short-term. It's still a risk. Are we going to be in a better place in 2 years? Is inflation going to be lower? It might be. Rates might come down. But one thing to take into account, which is the main thing, is you're going to need to renew your mortgage in 2 years. That's going to cost you £1,000 at least in fees, which will be added onto your mortgage, where a 5-year fixed rate, you don't have to renew. And that's almost 3 renewals, 2.5 renewals when you're doing 2-year fixed rates every 2 years. So that's another £1,000-odd. So that's why I prefer 5 years. Even if rates come down, you're still potentially breaking even. Then you've got to go through the whole process again. So bear that one in mind. Let's go back to the screen and have a look at some questions. Okay, so my 2.09% fixed rate will be finished at the beginning of 2025. I currently have 40k equity on my property. Any suggestions moving forward, and what shall I start thinking about? I'll come on back onto the rates in a minute and have a look at that. Trouty Posh. Finishing in the beginning of 2025. Okay, so just over a year. If I'm in your position, 2.09%, first of all, I'm going to be hoping that rates are going to be even lower by the time your renewal's due. I'd also be looking at mortgage rates now and considering securing a mortgage offer based on what rates are now. Okay, you don't have to take it out. A mortgage offer will normally last 5 or 6 rates. At the moment, it doesn't look like rates are going to go up, but things can change very quickly. So you secure something now. Then if in 5 or 6 months' time rates are even better, bin that current mortgage offer, get another one. And then by the time your mortgage comes round, if there's an even better mortgage, just bin the current one and top the new one up again. Obviously, you want to get to a point where the current mortgage offer you have on the table doesn't expire before your current renewal is due, because if you obviously renew your mortgage now before the renewal is due, you'll likely have penalties. Now, the point of renewing your mortgage before the renewal is due, or getting a mortgage offer on the table, is just so you've got something there in case rates shoot up. You might be in a better position to pay a penalty and renew the deal early. It's like an insurance policy. So that is what I tell my clients. I normally start talking to them around a year before their mortgage is due, even though we want to get the window when there is 5 or 6 months left on their current deal, because that's how long new mortgage offers last. We don't want to pay the penalty, of course, but there is sometimes a chance that paying a penalty might be better securing a deal than renewing on whatever is the updated rates. That's if rates go up. I hope that makes sense. Hopefully 5 or 6 months before your deal expires in 2025, rates will be even better than they are now. I would hope they are. Do rates get updated on a daily basis by the mortgage lenders? Well, what happens is they purchase mortgage rates from the money markets, and then whenever those funds run out, that's when they bring new rates to the market. So rates are being updated daily across the whole mortgage market, but not by a specific individual mortgage lender. They buy rates at whatever rate they get them at, and then when those funds run out, they then purchase more. Sometimes they want market share, so they might not make as much profit, and therefore they'll reduce their rates considerably just to bring in more customers and then try and sell other stuff on the back of that. Hope that is making sense so far. So let's go and have a little look at what's going on. Ignore that one. So 2-year fixed rate, 5.24, Virgin Money, exclusive again. Can't get that direct. Got to go via a broker. And what's Nationwide's one tomorrow? 5.29. That's reducing to. So as things stand, this exclusive, which we have with them, with Virgin, which you can't get direct, is currently the best 2-year fixed rate on the market, and that's based on a 10% deposit, buying at 300,000 with a 10% deposit over 30 years. You're looking at £1,496.42 a month, with an annual percentage rate of 8.8%. Okay, £1,295 fee added to the loan. Exclusive, intermediaries only deal here. All right, so that is pretty much what's going on. Let's have a quick look at the 3-year fixed rates here. See what's going on, just to give you an idea. 3-year money might be a little bit better than the 2. The 2 years are the highest rates, highest fixed rates on the market. So at the 3-year, we have got West Brom 5.44%, 1,527 a month, based on your 300 purchase price, 10% deposit, 30-year term. And Nationwide, so they're going to be going to 5.29% tomorrow with the 3-year fixed, which will top the rate. So top the market, so that will be the best 3-year fixed rate as of tomorrow. Okay, so thanks. The monthly payment figures here, do they cover some interest plus some equity? How is the split decided? So yeah, a repayment mortgage is also known as a capital and interest mortgage. It all depends on the mortgage term. So the longer the mortgage term, the more of your monthly payment will go on to the interest and the less on capital. As your mortgage term reduces, the more of your monthly mortgage payment will go on to the capital and less on the interest, until you get to the last few years of your mortgage where the majority of your payment will go on to capital. Okay, so if you increase your mortgage term, you're going to pay more interest at the start of your mortgage. All right, guys. Any more questions? Okay, just get them in. Going to start winding down now. Just wanted to jump on, do a quick live, let you know where we are with the mortgage rates. As of next week, we are going to be doing lives every Wednesday at 10 a.m. Just been getting everything prepared for that. And they're going to be more of a market and housing update on a weekly basis, so we can bring you, the topics of conversation in regards to the mortgage market, what's going on, look at trends, look at statistics, look at mortgage figures, mortgage approvals, look at housing, look at the housing market, how much property prices are coming on at, or properties coming on, our rates, are prices going up or down, that sort of thing. Okay, Sarabjeet, hi Alex, hope you're doing well. Actually, my question is, apart from the rate of interest, I wanted to ask, can I make my home a rental property? From first time buyer to rental, what's the process? Okay, so in theory, the process is just to obtain a buy-to-let mortgage, but you might be tied into your mortgage at the moment. So on the basis that I'm assuming that your circumstances have changed and therefore you'd like to rent out your property, maybe your job's changed, you won't need to work abroad, you got to go traveling, something's happened, you would then get in touch with your current mortgage lender and ask for consent to let. Okay, you got to go through an application, give your reasons, all that sort of thing. That is something we help people with as well. So if you wanted to discuss that further, again, just book an appointment. The link is in the description below to the website. But that is what you want to do. All right, so I hope that helps. And there we go. So 2024 is looking better than what it did a little while ago. The mortgage market has, the first 6 months was very good, and then rates started going up. Inflation, that reduced quicker than expected. We got to a point where in October, mortgage approvals were about 43,000, which were really, really low, which hadn't been that low since 2008, the recession. So it's been a very up and down mortgage and housing market this year. It's gone from looking great to looking terrible. But there has been some light at the end of the tunnel now, with inflation being lower than expected. I do think 2024 rates will carry on creeping down. So I think good time to buy. I think a lot of you are waiting till 2025, where house prices are going to carry on going down, and I think that's when inflation is going to get to the target of 2%. So yes, we're going to carry on going down in 2024. There's lots of pros and cons. I've had people say, don't buy next year, buy 2025. But, you could get on the market next year and you've got a whole year worth of capital that you're paying into, which is a benefit. Lots of pros and cons. To get on the market and the housing and the property ladder, the best time to buy is always 5 years ago. The quicker you can get on, the better. In the short term, you may lose out over a year or two, but long term, property always delivers over 10, 15 years. Whatever you buy it at today, history tells us it's always going to be worth double at least in the future. Okay, so thanks for everyone who's watched. I'm going to log off now, and I will see you next Wednesday at 10 a.m. every week on a weekly basis. You have a beautiful day.